Hi everyone, hey, thanks for taking a minute to watch this video. Hey, we are coming up on Halloween and actually one of my favorite holidays. I don't get scared very easily, but I do want to tell you today about something that does scare me a little bit. Whenever the Federal Reserve meets, I get a little scared. And let me tell you why. Last week the Federal Reserve met, and just to give you context, the Federal Reserve doesn't directly control interest rates. They don't set interest rates, long-term interest rates, mortgage interest rates. They have their own federal funds rate that they do control directly and that they do set, but that's different than long-term mortgage interest rates. That is based on a market. It's based on bonds and the demand in the bond market for mortgage bonds. So the Federal Reserve meeting last week, whenever they meet, and Jerome Powell is the Fed chairman, and whenever he comes out with commentary, I get a little nervous. I get a little scared. I got to be honest with you. I don't get scared by a lot of the Halloween stuff, but Jerome Powell, he can scare me a little bit because a lot of what he says affects interest rates and the bond markets, investors, their interpretation of his commentary. And last week, when the Federal Reserve met and came out with their commentary, they said, hey, we are looking to taper. What that means is that they're going to stop buying as much in mortgage bonds as they have been in the past. And the Federal Reserve has been the largest purchaser of mortgage bonds. That's what's driven rates down, is that the government got involved in the mortgage business, basically. And this was back during the Great Recession. And that involvement has driven rates down low since that time. And yeah, we've had some roller coasters here and there, but the fact of the matter is they've been a huge, huge purchaser. Well, now they're saying we're not going to purchase as much probably pretty soon. And that will start to definitely push interest rates up. Case in point, as soon as they came out with that commentary, immediately we saw interest rates rise. And just to give you some insight in the mortgage interest rates world, they generally go up like a rocket and they float down like a feather. Okay, so it is something where when we see a threat on the horizon to interest rates, which I do see right now for twofold reasons. One, because the Federal Reserve tapering. Number two, because inflation is rising, okay? And inflation is kind of the arch enemy of bonds. The bottom line is that the Federal Reserve meets again in November. That will be a scary time for me as well during that time. And if you're looking to refinance or take out financing, that may be a little bit of a scary time for you too, because I think that you could probably go to the bank on the fact that we'll see interest rates rise after that next commentary in November. So the takeaway is, if you're on the fence right now, if you're looking at refinancing or restructuring your financing that you have, or maybe you're looking at purchasing a place, I'd say lesser to the degree for a purchase, but definitely for a refinance, you want to jump on the market that we have now. I know I've beat that drum a few times, but there's a reason for it, because we're going to see those rates bump up a little bit more. So if you have questions about your own situation, your own scenario, or you've got a friend or family member that is considering refinancing, please pass this video along to them, and then give me a call, shoot me an email. I'd love to help you walk through your scenario, see if it makes sense, and take advantage of the market that we still have right now. So hey, thanks so much for watching. I hope you have a wonderful Halloween and a wonderful fall as we transition out of summer. And feel free to give me a call with any questions that I can help you with. Thanks for watching and have a great day.